Hey gang, Matt from Easy Breakouts, about to start another current market trend review, but before I do, just wanted to mention that if you find this video helpful, be sure to click on that subscribe button down below. Also, you can view additional videos by visiting our YouTube channel. Alright, let's hop into our analysis. So folks, we capped out the week somewhat flattish here. We actually saw the Nasdaq again positive, kind of a similar thing we've been seeing here, the Nasdaq with the relative strength. But looking at the down, the S&P is essentially flat, unchanged. The Russell slightly a bit of an offer building, but the Nasdaq is green, adding to some of those all-time highs, up 5.6 points on Friday. We saw the crude backing off, still in a bit of a range. Gold bouncing just a little bit, but no clear tell on that one yet. And then the bonds kind of bouncing a bit as well. We'll see all of this on the charts, but as always, starting off our analysis here with the S&P 500s on the dailies. So folks, as we take a look at this is that area we broke out of. This is what we've been looking for from the markets, and it seems like we're hitting a little bit of resistance right up here at these whole numbers, which typically tends to happen. We call them like century figures, right? 2300 multiples of 100. So a lot of times, even if there's no real resistance up higher, a lot of times those whole numbers become a good place for investors or traders to start maybe taking off some profits, peeling off profits. But as we move over to the intradays here, one of the things we've mentioned to the trading room and our traders here is just as long as we maintain these 2280s, that's going to look pretty solid. It looks like we're building a leg higher, but if for some reason you're down below those 2280s, that's where you have to start to question the validity of the breakout and how many buyers are really trying to push this market higher. So just look at that from the downside, just making sure we can stay above those 2280s. Let's move over to the NASDAQ here, because we did see a green close on the NASDAQ, a new all-time high close, not a new intraday high, but just a new all-time high close. And look at that relative strength. And we've been mentioning here how that Nasdaq has been leading the charge. We actually had first pointed out how the Nasdaq had a bit of an inflection or a turning point in its relative strength way back here in the beginning of January. We had pointed that out and we said, heads up folks, this could be a bit of rotation back into some of those big cap leaders that have led us since really the 2012 rally, talking about like the Apples, the Netflix, Google, Facebook, those types of names. And here we see, folks, as we're coming into the end of the week here, this past Friday, that those were the names that were leading us higher. So just a quick peek across the board here, taking a look at the Amazon, right? The Amazon had broken out of this area here. That was kind of a cup with handle, looking at that region there. The Facebook also mentioned to managed to break out here earlier in the week, last week, right? Cup and handle on that one as well. Google, which reported earnings on Friday, kind of a big bar reversal here, but overall that was actually breaking out much earlier on, so maybe just a bit of profit taken on weaker than expected earning results. But that breakout here from that cup and handle, and this is a reason why folks, we mention a lot of times in these videos, just be very careful of the earnings. We typically don't trade holding into earnings. We don't typically trade the day of earnings. There's very volatile whipsaw action. We like to typically take trades when there's no news and it's just buyers that are coming in, right? Because when there's news that comes in, it makes the stock a little bit more volatile. It's harder to read true volume breakouts. So that's why we stay away from these earnings periods, because a day like today could happen where you're higher in the day. This is what you would call a bearish engulfing day for a lot of chart technicians out there. But you start the day off higher above the previous highs, and then by the end of the day you close down on the lows. It's not the best technical setup there for the bulls. So just keep an eye on that Alphabet or Google here that could potentially see a little bit more of an offer build throughout the next few days. But we did see Microsoft reporting on Friday as well, and that broke out nicely, right? Nice gap up on earnings. That has been a relative strength leader. A lot of our traders have been mentioning this Microsoft as well. So folks, as we continue to watch this market on highs, you're going to want to continue seeing these big cap stocks continue to break out. Now, speaking of big cap tech stocks, we were mentioning in the room how Netflix is a stock that gapped up, and a lot of traders felt like this left them behind. And one of the things we've always said to traders is, hey, look, if a stock gaps up, don't chase it. Wait, because more often than not, you'll see secondary entries along the way. And that's exactly what happened with this Netflix here. It gapped up, right? And one of the things we told our traders is, don't just chase it, because you could get a stock that starts fading away, and you don't know if it goes all the way back down or if it reverses and goes back up. So it's best to wait for a setup
and then purchase the stock once it's breaking out of that secondary setup. And so in this case, it gapped up, kind of went sideways for a good 4 or 5 days here. And you can see that there's a bit of resistance here right around the 141s, right? It wasn't able to get above it here, here, or here. And actually intraday on Friday was not able to get above those 141s. Once it got through the 141s, though, here it is, folks. Look at how it forms this nice little handle right at the 141s, right? Backs off, comes back up, goes really nice and tight sideways. Once it breaks out, that's where you have that nice lift off. Closed the day about $1.50 higher. Nice trade there. And again, no matter what you're looking at, an $800 stock or an $8 stock, these chart patterns are telling you what's happening with the buyers and sellers. This is why we look at chart patterns. And again, it's not just any chart pattern. We want to look at the best relative strength stocks that are leading the charge higher, that are breaking out of recognizable bases and on high volume, right? That's always been our game plan. So let's move over to the commodities here, folks. Pretty quiet day for the most part. Here we have the gold. We had mentioned to our room here that watch out for the gold below the 1190s, or 1195s, I should say, because once you broke that, this is really that battleground right around the 1200 evens. We took it all the way up to 1220s and formed the balance right around the 1190s, back in filling. Finally, you broke down below it, kind of a bit of an offer. So this just indicates to us there's still sellers right around these 1200 areas. The buyers so far have not been able to push this off those lows where we caught a bid at the beginning of the year, right? And then when we move over to the gold here, or I should say the bonds rather. We just looked at the gold. Moving over to the bonds are in a bit of a range as well. So any trade above the 125s, and I think we could catch a little bit of a higher move in the bond prices. But right now, folks, if you break down below those 123s, it would be a continuation of that weak trend, that kind of bearish momentum that's been building in the bond prices. Remember, as yields go up, as interest rates go up, it puts pressure on those bonds to the downside, the bond prices. And then finally here, taking a look at the crude, still in a bit of this range. We tried to even get up above these 53.50s, kind of got rejected here at the 54s, closed the day right down on the lows. So folks, as you take a look at this, the commodity market's somewhat sideways. Where the real action is in individual equities. And to that point, there's a stock that we actually took on Thursday afternoon. Let's pull it up here. TDOC is the ticker. And when we look at this TDOC, here's this nice resistance area, nice little flat base going on here. And one of the things you notice is how the volume's starting to ramp up. They even did a secondary there. That's why there was so much volume. And folks, when you see that volume ramping up like that, it's telling you that somebody's trying to buy the stock. And we had entered this on a swing trade back here like the 1940s, going right across this area. And in fact, if we zoom out, it'll be a little bit clearer how we got into that, right? Here's that 1940s, right over these highs. This is a 60-minute chart. And we saw this shoot all the way up to almost the 2130s on the day. Folks, this has been a great trade. We've been scale out sellers, and now we're just going to see if this thing can turn into a runner. But we've already taken some great profits on this trade. And this is why you've got to look at these stocks. Look at this, right? This stock is trading near the highs before it breaks out. It's got the volume already coming in before the breakout. And this is a very important point, folks. This is why I keep stressing on these videos. The game plan always has been, always will be, looking for the best relative strength stocks, breaking out on volume from recognizable chart patterns. But that is always going to be the game plan. Folks, if you don't have a program that can help you to identify these stocks, I highly suggest you hop on one of our webinars and check out the different ways that we identify these stocks and how we look at these chart patterns. But other than that, folks, have a great trading day ahead and join us for our next market trend review.
Hey, by the way, if you haven't done so already and you're liking the analysis, go ahead and hit that subscribe button down below. And as a reminder, you can also view additional videos by visiting our YouTube channel. Or if you'd like to find out more about Easy Breakouts, go ahead and click that Show More right above the comments section to find out more about Easy Breakouts. But other than that, have a great trading day ahead, and may the trend be with you. Take care, everyone.